As the climate heats up, so do shareholder meetings. Major oil and gas companies have been facing off more frequently with activist shareholders who want to force management to think more green. BP's investors this year voted overwhelmingly for the company to report on how its investments align with the Paris Climate Accord. And this summer, we even saw investors dump big oil shares. One of Exxon's top 20 shareholders, Legal & General Investment Management, divested about $300 million worth of shares in June. Now, investors may have cause for concern, according to a new report by the Transition Pathway Initiative, which is fronted by asset owners looking to shed light on climate change. When it comes to Paris, meeting the Paris Climate Agreement, only two companies, Shell and Repsol, will come into alignment before 2050, though with the least ambitious pledges. The report also says the majority of companies here in orange are not aligned, mostly because they're focused on cutting their operational emissions while not worrying as much about the emissions from the products they sell. But when it comes to big budgets, BP is the one that's taking the lead. 83% of its potential capital expenditure is allocated to projects that will likely be safe investments in a world that keeps warming well below 2 degrees Celsius. That's according to a report by Carbon Tracker, which counts former analysts of major banks and scientists among its staff. U.S. giant, though, Exxon fared the worst with only 63%.